What if the money in your wallet, the bills and coins you've used your whole life, became useless in the next 10 years? Not worthless from inflation, but worthless because nobody will take it. This isn't a wild prediction from a movie. It's a financial revolution that's happening right now, and it's about to change everything you know about money, wealth, and power. We're standing at a critical moment. The very idea of money is being rewritten by powerful new technologies and even more powerful institutions. This shift promises a world of amazing convenience, but it also hides some terrifying risks to our personal freedom and financial independence. In this video, we're going to pull back the curtain on the forces pushing us toward a cashless society. We'll explore the technologies replacing physical money, expose the battle for control raging behind the scenes, and most importantly, show you what you need to do to protect yourself and even prosper in this new financial era. Stick with me, because the single most important decision you can make about your financial future is about to become crystal clear. Think about your last week. How many times did you actually use physical cash? For a lot of us, the answer is probably once or twice, if at all. In the US, cash now makes up only about 14% of all payments, and that number has been dropping steadily. We tap our cards, wave our phones, and click Buy Now online. The convenience is just undeniable, and it's the most visible part of the wave pulling us away from physical money. But this trend isn't just about personal choice. It's a global shift driven by some powerful forces. For businesses, digital payments are faster, more efficient, and cut down on risks like theft. For you, it means no more fumbling for the right bills or carrying a pocket full of change. This change in our behavior, which the pandemic kicked into overdrive, has created the perfect environment for something much bigger. The convenience we've all welcomed is the gentle current, but there's a powerful undertow just beneath the surface. Governments and central banks see this as a golden opportunity, not just for efficiency, but for something much bigger: control. Section 1. The end of cash and the rise of digital money. The slow death of cash isn't just about convenience, it's about the entire infrastructure of money changing under our feet. There are three different but connected forms of digital money, all competing to replace the paper in your wallet. First, you've got the digital payments we already use every day. When you use a credit card, PayPal, or a banking app, you're not actually moving physical money. You're using a system of digital IOUs, where commercial banks promise to settle debts for you. These are private, centralized systems built on top of the old banking framework. They're convenient, sure, but they're also controlled by middlemen. Second, there are cryptocurrencies like Bitcoin and Ethereum. These were created out of a desire to break free from the control of banks and governments. They run on a technology called the blockchain, which is basically a public digital ledger that's decentralized. Instead of one bank holding all the records, those records are spread across a global network of computers. This makes them incredibly hard to censor or shut down. It's the vision of peer-to-peer electronic cash, where no single person or group is in charge. But the third and most powerful player entering the game is something called Central Bank Digital Currencies, or CBDCs. This is the government's answer to the digital money revolution. A CBDC is a digital version of a country's official currency: a digital dollar, a digital euro, a digital yen, issued directly by the central bank. As of 2025, a stunning 134 countries, which represent 98% of the world's GDP, are exploring or developing a CBDC. This isn't some small-scale experiment, it's a coordinated global movement. Imagine your bank account, but instead of being with a commercial bank like Chase or Bank of America, it's held directly with the country's central bank. That's the world of CBDCs. Over 65 nations are already in advanced stages, with major economies like India, Brazil, Japan, and Russia running pilot programs. And while only a handful of countries like the Bahamas, Jamaica, and Nigeria have fully launched a CBDC so far, the momentum is undeniable. So the question isn't if this will happen, but when, and what it will mean for your money and your freedom. Section 2. The two futures of money: centralized control versus decentralized freedom. We're at a fork in the road, and the path we go down will define wealth and liberty for generations. On one side, you have the top-down, controlled world of central bank digital currencies. On the other, the bottom-up, open world of decentralized finance. First, let's look at the world of CBDCs. Supporters argue that CBDCs will make our financial system more efficient and inclusive. They could lower transaction costs, speed up payments, and offer financial services to people without access to traditional banks. Governments could send stimulus payments or tax refunds directly and instantly into your digital wallet. Those are some pretty attractive benefits. But the same technology that allows for that efficiency also allows for an unprecedented level of control. Because a CBDC is issued and controlled by a central authority, every single transaction can be monitored and recorded in real time. Who you paid, what you bought, where you were when you bought it, all logged on a central ledger. This leads to the most controversial part of CBDCs, programmability. Programmable money is money that comes with rules attached. While most central banks are playing it cool with their public statements, the technology itself opens the door to new kinds of control. For instance, in pilot programs in China, the government has tested a digital yuan that has an expiration date, forcing people to spend it by a certain time to stimulate the economy. It's a concept that even the World Bank has described as a potential tool for monetary policy. Privacy advocates are sounding the alarm, warning that this is a slippery slope. Could money be programmed to be spent only on certain things, like government-approved green products? Could it be blocked from being used for things the government doesn't like, such as buying too much gasoline or donating to a political cause they don't support? While it's important to separate what's technically possible from what's officially planned, the fact is that the architecture of a CBDC creates the potential for a level of financial surveillance and control that was never possible before. The ECNY pilot in China, for example, is seen by many as a blueprint for how a CBDC could be woven into a much broader system of state oversight. Now, let's look at the other path, decentralized finance or DeFi. This is the world of Bitcoin and Ethereum. The core idea here is the complete opposite of a CBDC. Instead of a central authority, the network is run by a distributed community of users. No single person or company can change the rules, freeze your funds, or block a transaction. This system offers true financial self-sovereignty. It's like having a bank account where you are the only one with the key. It's resistant to censorship, doesn't require permission, and is global. The opportunities here are massive. The ability to send money anywhere in the world for a fraction of what it costs with traditional systems, the power to save and invest without needing a bank, and the freedom to make transactions without worrying about surveillance or control. However, this world isn't without its own risks. The crypto space is famously volatile, it can be complicated to get started, and it's still very much in its early days. It also demands personal responsibility. If you lose your private keys, there's no customer service line you can call to get them back. The future probably isn't a simple choice between one or the other. In between these two extremes, a whole ecosystem of other digital assets is popping up, like stablecoins, which are cryptocurrencies pegged to the value of an asset like the US dollar. These are acting as a bridge between the old and new financial worlds. The reality is we're probably headed for a hybrid system where traditional digital banking, CBDCs, cryptocurrencies, and stablecoins all coexist in a complex, competitive, and sometimes chaotic dance. If you're finding this eye-opening, and if you agree that understanding this financial shift is vital for your future, take a second to hit that like button and subscribe to Wealth Saga. Our mission is to give you the powerful insights on money, business, and mindset that you need to thrive in this rapidly changing world. Section 3. The terrifying risks and incredible opportunities. This transition to a fully digital money system is a double-edged sword. On one side, you have profound risks that could threaten the fabric of our society. On the other, there are opportunities to build a more fair and innovative financial future. Let's start with the risks, because they require our full attention. The biggest one is the death of privacy. Physical cash is anonymous. It allows for private transactions, which are a small but crucial part of a free society. In a world dominated by CBDCs, that privacy could vanish. A complete, permanent record of every financial move you ever make could be held by the government. This isn't just about catching criminals. It's about creating a detailed profile of every citizen's life. Another major risk is financial exclusion. While supporters claim digital currencies will help the unbanked, a poorly designed system could easily leave people behind. What about older folks who aren't tech-savvy? Or people in rural areas with bad internet? Or those who simply don't trust digital systems? In a society where cash is no longer an option, these people could be completely cut off from the economy. The Federal Reserve's own data shows that lower-income households and older adults still rely more heavily on cash. And then there's the risk of absolute control. The idea of programmable money, even if it's not fully rolled out at first, is a Pandora's box. The potential to apply negative interest rates directly to citizens' money, to make money expire to force spending, or to restrict purchases based on some kind of social credit system is a threat to individual liberty that we can't just ignore. A 2023 survey showed that 74% of Americans would oppose a CBDC if it gave the government the power to control how they spend their money, signaling deep public concern about these possibilities. But this isn't all doom and gloom. The same technological revolution also unlocks some incredible opportunities. The rise of decentralized finance offers a real alternative, a parallel financial system that is open, global, and doesn't require permission. For the first time in history, anyone with an internet connection can get access to financial services without needing a bank. This opens up huge possibilities for entrepreneurs and creating wealth. Transaction costs for international business could drop to almost zero. Small businesses could reach global markets with ease. Artists and creators could get paid directly by their audience, without middlemen taking a huge cut. DeFi allows for new ways to save, lend, borrow, and invest, giving people more options and more control over their own money. Plus, the competition from these decentralized technologies is forcing the traditional financial system to get better. The pressure from crypto is one of the main reasons central banks are rushing to develop CBDCs in the first place. This competition could lead to better services, lower fees, and a more robust financial system for everyone, but only if we consciously choose the path of freedom and openness over control and surveillance. The opportunity here isn't just to get rich from a new technology, but to build and be part of a financial system that's more fair, transparent, and empowering for everyone. Section 4. How to prepare and protect your wealth. So, what does all this mean for you? Just standing by and watching this happen is not an option. Being passive is a choice, and it's a choice to let other people decide your financial destiny. The future of money is being built right now, and you have a chance to position yourself for the world that's coming. Here are the essential steps to take. First, and most important, is education. You're already taking that step just by watching this video. You have to understand the fundamental difference between a central bank digital currency, a decentralized cryptocurrency like Bitcoin, a stable coin, and the digital money in your bank account today. They are not the same thing. One represents centralized control, the other represents decentralized freedom. Knowing this difference is the #1 secret to navigating the next decade. Read, watch, and learn from credible sources. Don't just follow the hype or the fear. Seek to truly understand the technology and what it means for society. Second, start to diversify your assets in a way that reflects this new reality. This doesn't mean you should sell everything and pile into crypto. It means thinking beyond just traditional stocks and bonds. For centuries, smart investors have held a small piece of their portfolio in assets outside the mainstream financial system, like gold. In the 21st century, digital assets like Bitcoin are starting to be seen in a similar way, as a hedge against instability and a form of digital property that you can truly own. Consider a small, measured allocation that you're comfortable with. Third, prioritize and practice financial privacy. Start paying attention to which companies and services are tracking your financial data. Look into using tools that can enhance your privacy. In a world of growing financial surveillance, the ability to keep a degree of privacy will become an incredibly valuable skill and right. Don't give up your privacy for a little bit of convenience. Finally, adopt a new mindset. The days of passively putting your money in a savings account and expecting it to grow are over. The nature of money itself is becoming more dynamic and complex. You need to shift from being a passive consumer of financial services to being an active, sovereign manager of your own wealth. This means being proactive, staying informed, and taking responsibility for your financial future. The game is changing, and you need to understand the new rules to win. We are living through one of the most profound shifts in the history of money. The slow disappearance of cash is just the first sign. Underneath it all, a battle is being fought for the soul of our financial system. On one side, you have the centralized, controlled vision of government-issued digital currencies. On the other, the decentralized, open vision of peer-to-peer money. The outcome isn't set in stone. The technologies being built today offer two very different futures, one of incredible convenience under the watchful eye of a central authority, and one of incredible freedom that comes with the full weight of personal responsibility. The path we end up on will be decided by the choices we all make today. By educating yourself, positioning your assets wisely, and demanding financial sovereignty, you aren't just preparing to survive this transition, you are casting a vote for a future where technology empowers the individual, not the state. The future of money isn't just about technology, it's about freedom. The journey to mastering this new financial world doesn't end here. In our next video, we'll reveal the #1 strategy that billionaires use to build unstoppable wealth during times of great technological change. You won't want to miss it. Check out the next video on our channel, Wealth Saga. And don't forget to like, subscribe, and share this with someone who needs to see it.